Welcome to the earnings conference call. TGI and Calidda results and key developments third quarter 2013. My name is Hilda and I will be your operator for today. At this time, all participants are in a listen-only mode. Please note that this conference is being recorded. This earnings call is divided in two parts. First, we will have with us Mr. Santiago Pardo, Chief Financial Officer of TGI, presenting TGI third quarter 2013 results and key developments. And then we will have with us Mr. Adolfo Herren, Calidda's General Manager, presenting Calidda's third quarter 2013 results and key developments. I will now turn the call over to Mr. Santiago Pardo. Mr. Pardo, you may begin.
Thank you, and good morning to everybody, and thanks for your participation in the call. I would like to start the presentation of our third quarter results, showing obviously our giving you a little bit of background on the company. I'll be brief on this because most of you guys already are very familiar with our company. But just to put you in context, TGI is the largest gas transportation company in Colombia. We own approximately 61% of the infrastructure for transportation of natural gas in Colombia, and this is a network of approximately 4,000 kilometers. We serve the area that has 70% of the population and 82% of Colombia's GDP. And we own our assets. We are not a concession. And we own a 25% interest in Contugas, which is a company in Peru dedicated to the transportation and distribution of natural gas, and in which our parent company EEB is a 75% owner as well. And we are interconnected also to all of the main producing basins for natural gas in Colombia, which gives us great flexibility and strategic advantages. In terms of our shareholders, as you all know, EEB is our main shareholder with 68%, and our minority shareholders, CVCI, a private equity fund, with 32%. Moving on to our financial and operating highlights. Let's start with our operating highlights. I think I want to highlight in this piece that we're having a very good year in terms of our operations. As you see from the graph starting on the top left, our network length has remained stable, as we have not put into operation any new expansions during this year, and that was as expected. So both our network length and transportation capacity remain stable. However, we have continued to increase our contracted capacity. We had 604 million cubic feet a day contracted as of December 2012. By September, we have increased that to 630 million cubic feet of capacity, and this is actually what drives our earnings and our income, and so this has enabled us to post very strong results in this year. Also, in terms of transported volume, we've seen increases in the transported volume. This year, we've transported on average 446 million cubic feet a day, and in fact, during the month of September, we had. I believe it was on September 20th. We had the record of transportation in our system, which is 570 million cubic feet a day. We transported on that date, which is a record, and that just I think goes to, I guess, the very strong demand for natural gas that we've seen this year in Colombia, driven not only by the distribution companies, but also to a great extent we've seen a significant dispatch of power producers in the interior of the country that has resulted in higher transported volumes for us. Finally, as you can see, we've been able to reduce gas losses by almost half, from 0.5 in 2012 to 0.24 in 2013, and this is something we're quite proud of, and actually results in a more efficient operation for us. Let's moving on to the following slide. We have a 48% market share in terms of gas transportation in Colombia, and the other main companies in our industry in Colombia is basically Promigas, which is the transportation company in the north coast of Colombia. They're not actually a competitor of us. Their region of operation is completely separate from ours. And then there's a few smaller transportation companies that account for about 15% of the market. In terms of our sales this year, as you know, most of our revenues are derived from from capacity charges and that are not based on volume transported. So that gives us great stability. We do have some proportion of our income that comes from variable charges that move with volume. That gives us some upside when we have situations like we had this year. But at the end of the day, approximately 83% of our regulated revenues are from fixed tariffs. All of our revenues or all of our contracts that we have signed are firm contracts. They're not interruptible contracts, and they have an average life of 8.3 years. In terms of the revenues breakdown, what we have seen is significant increase in the distribution sector. In the distribution companies represent now 58% of our sales. That is increased by about 5% from what their participation at the same point in time last year. And these companies have a very stable consumption pattern with very minimal seasonality, as there are no marked seasons in Colombia. So this results in very stable consumption. The refining sector is 11%, also very stable consumption pattern, and the vehicle sector is about 7%, also with very stable consumption patterns. In terms of who are our main clients, our three main clients continue to be in order: Gas Natural, which is the distribution company in the Bogota area; Ecopetrol, the national oil company; and Gases de Occidente, which is the distribution company in the area. Those three are our main customers, and EPM and Isagen also are very important customers for us. EPM is obviously the utility company in Medellin, and Isagen is the third largest power producer in the country. Slide 10 shows the profile of our transportation contracts, which, as I mentioned before, have an average life of 8.3 years. We have significant maturities coming up in December 2020, but as I believe we have mentioned in previous calls, we are not very concerned about our recontracting risk, given that most of our or all of our customers need their gas to operate their underlying businesses, and in fact we expect that most of our customers will want to renew their contracts well in advance, and by this I mean a couple of years in advance of their maturity, in order to make sure that they keep the capacity they have in the pipelines right now. Moving on to slide 11. This shows our main financial results. And as you can see, in terms of revenues, we measured in U.S. dollars. We have grown to $450 million in revenues in the last 12 months as of September 2013. This compared with $391 million in the year 2012. The main drivers of this increase in revenues are threefold, I would say. One, we had a tariff reset started in January of 2013. This is a result of the review of our tariffs by our regulator. So we have new tariffs which are on average 10% higher than the tariffs that were in place in the prior regulatory cycle, and these tariffs will be in force for at least 5 years, if not more. We actually expect that they will be in force for at least 6 to 7 years, because the regulatory cycles tend to, although in theory they're 5 years, they tend to slip, and on our more like 6 or 7 years. So first, we have higher tariffs. Second, during 2012, the second half of 2012, the Cusiana Phase 2 project came into operations, and as a result of that, we're seeing 2013 a full year with the benefit of that new project in operation, vis-a-vis 2012, which only had less than half of the year with the project in operation. And third, as you saw previously, we have increased our contracted capacity from 604 million cubic feet a day to 630 million cubic feet a day. That also gives us an additional boost. And finally, the additional volumes that we're moving also result in higher revenues for us, although, as I mentioned previously, variable revenues are not the most important source of revenue we have. This good performance in terms of revenue on the revenue side obviously traduces itself in terms of EBITDA. We, as of the last 12 months of September, we are at $350 million of EBITDA versus $289 for the full year 2012. This is well above our forecasts. We had forecasted initially for 2013 an EBITDA of $324 million for the whole year. So we're already about 8% above that in the last 12 months of September. And obviously we would expect that by the end of the year we would be at levels similar to where we are in September. And finally, in terms of cash flow generation measured as funds from operation, we are at $254 million, which is a very, very significant increase from 2012, almost double. Part of the increase is a result of the fact that in 2012 we did the refinancing of our debt, and so we had, first of all, a few months with higher interest costs, and then we had the cost of the premium we had to pay for the repurchase of our bonds, which reduced our FFO. So those things were not present in 2012 and not present in 2013, and so that makes the FFO for the last 12 months rise significantly. Finally, in terms of capex, we have done capex for the first 9 months of the year of $28 million. That is well below what we had forecasted. A couple of the expansion projects in which we are working on, particularly Cusiana PI San Fernando, have not moved as quickly as we had expected initially, and so that has resulted in a delay of the capex, and that we'll be able to see in the next few slides. Moving on to our debt metrics, in terms of total debt to EBITDA, that's including including our both our senior and subordinated debt, as well as the mark-to-market of our hedging operations. Our debt to EBITDA is 3.6 times, and if we look at net debt to EBITDA, we're at 2.77 times. These are indicators which are quite robust and which give us great financial flexibility. In terms of senior debt to EBITDA, we're at 2.5 times, and if we look at senior net debt to EBITDA, we're at 1.68 times. And interest coverage is approaching almost 6 times. Finally, and in terms of things that we want to highlight, that there are a few important recent regulatory decisions in Colombia. In terms of the natural gas market, the first one I'll go I think backwards. The first one is the correct resolution 088 of 2013, which basically liberated the natural gas prices in the north of the country. Previously the natural gas produced in the Ballena fields in La Guajira was regulated by the government, and the price was around $6. The government wants to continue to promote natural gas as a fuel, and there was a significant differential between the prices in Ballena and the prices in the middle of the country, and so they took the decision to liberate the gas prices there, and then through resolution 089 they established regulation for the market of natural gas, meaning mostly the natural gas molecules, the actual gas. And so they went through definitions of contractual arrangements, and actually that resolution basically required that there be a process of a negotiation of natural gas contracts in the month of October of 2013, so that all parties that are interested in purchasing natural gas, including ourselves, could negotiate their natural gas contracts for the next few years with the producers. That process has already taken place, and we think that it's quite positive for the development of the market, because the prices that most of the consumers of gas have been able to obtain have been very advantageous, and we think will result in growth in the demand of natural gas in the long term. And finally, this resolution 089 also defined in terms of the gas market, including transportation. They put in place what they call a gestor de mercado, which is an entity that's going to kind of run the market for natural gas, much as XM does today in the electricity market in Colombia. So there's going to be this entity that's going to be like if you will, the clearinghouse, and it's going to run the market for both natural gas, physical molecules, and as well as transportation, so that we can generate more flexibility in the market, and at the end of the day, more growth. And then there's a decree 2100 which has more to do with reliability, and to a great extent will probably result in new business opportunities for companies in our sector. Finally, I want to spend a few minutes in terms of our expansion projects, telling you about how those are progressing. First of all, the La Sabana compression plant. This project is on schedule. We are already doing work on the site, and expect to have completion of the project and operations in August 2014. Cusiana, Apia, y San Fernando, which was the project with Ecopetrol, we have actually just finished the basic engineering work for that, and are in discussions with Ecopetrol regarding the gas transportation contracts that we're going to sign to make this project viable. Once we do that, which we expect will be either probably in the first quarter of next year, then we would move to detailed engineering and selection of contractors to do the actual work. Moving on to the next, and this would be expected to start operations probably in either late 2015 or more likely in 2016. Next, we have the following other smaller projects, but not less important. First, we're thinking about expanding one segment of the pipe that is called La Belleza Vasconia, which has become basically a bottleneck where if we are able, by spending about a very modest amount of money, $14 million, we will expand capacity to 230 million cubic feet a day in that segment, and that will enable us to basically sell some excess capacity in other segments of our pipe that we're not currently able to sell because of these bottlenecks. So this $14 million project could generate as much as $4 to $5 million of additional revenue per year once it's completed, and this is something we can probably complete either in late 2014 or early 2015. There's a mistake in the next one. That should be not La Belleza Vasconia expansion, but that's a project to change to do some investments to allow us to reverse flow in the Ballena Barranca Bermeja pipeline. So by spending about $20 million, we'll be able to have the flexibility to move gas on the Ballena Barranca Bermeja pipeline either north-south, which is the direction it's coming right now, and by spending this $20 million, we'll be able to move gas from south to north, and this will provide greater flexibility to the system, and we think is going to be quite interesting for some of our customers. Finally, we have the Eje Cafetero branches we've talked about in previous calls. The cost of this is about $28 million. And then we're spending about $5 million to make some adjustments to our infrastructure to allow us to receive gas from Venezuela. The Venezuelan government announced, I believe a couple of months ago, that they would sometime in 2014 or 2015 start exporting gas into Colombia. Right now, Colombia exports gas into Venezuela, and this capex that we're going to spend there would allow us to make the adjustments to be able to receive that gas. So that is our presentation. All of these projects finally are fully financed. We do not need to issue any additional debt to undertake these projects, and we're actually quite happy with, as we hope you will be too, with the performance of the company in this year of 2013, and have good expectations for the following quarters. With that, I'll turn it over to questions and answers.
Thank you. We will now address your questions. If you have a question, please press star, then 1 on your touchtone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star and then 1 on your touchtone phone.
Well, if there are no questions, I guess I would just like to thank everybody for their time, and also thank everybody for their continued support of our company.
Thank you, Mr. Pardo. And now I would like to turn the call over to Mr. Adolfo Heren, Calidda's General Manager. Mr. Heren, you may begin.
Thank you. Good morning, everybody. We are going to start the results and significant development as of third quarter of 2013 from Calidda. The first slide we are going to show are the significant development that we have in the last quarter. First, we want to mention that the construction of the main grid expansion project was concluded in May, increasing Calidda natural gas distribution system capacity from 255 million cubic feet per day to 420. We have the final approval by the government to start operation by August. So right now the whole system is running. Second important or significant development for last quarter was that Calidda 5-year investment plan, this is for period 2014 to 2018, was submitted to the regulatory entity, that is Osinarmin, in July, and the last proposal was submitted in October. And we expect to get the approval by May 2014. That's the regular period for this process. And under that approval, we are going to have the new tariff scheme for the years 2014 to 2017. Another important issue or another important development for this last quarter was that in August, the Peruvian government approved the provision to improve the mass operation of natural gas. And I want to mention here 2 points because under this approval were included a couple of benefits for the company. The first one is that we can continue using the promotional discount system for up to 10,000 households clients per month. There is a phasing here that starting with the number we had at August, increasing up to 10,000 by next year. Actually, we are last month we achieved 7,500 installations, so we are pretty close to achieve the 10,000 in the next month. And the second point is was approved that to require building internal installations in all new constructions of multifamily buildings. The idea is that the government wants to facilitate natural gas supply and distributions in all the districts where natural gas distribution exists or may exist. Moving to the next slide, we have the operational performance for last quarter. We can see that our network in the first graph is increasing. Over Q3, Calidda distribution network was expanded by 237 kilometers, reaching a total of almost 3,100 kilometers. At the end of Q3, Calidda high pressure system, we built 17 kilometers of high pressure network and 572 kilometers of our secondary network. All this network help us to have more clients in new districts in Lima. Additionally, part of this high pressure also serves to connect the industrial customers. In terms of capital expenditure, in Q3, Calidda invests, until for the whole year, until Q3, Calidda invests $61 million of expansion of our distribution network. We expect, under our investment plan proposal for 2014 to 2018, to invest close to $500 million for that whole period. And that's part of what we present to Osinarmin as our investment plan for that period. This investment will help us to increase and to reach more than 10,000 customers per month, as I mentioned before, aligned with the government proposal and scheme to benefit more households in Lima. Moving to the next slide, we have the commercial performance. In the first part, we have the power generators. We include one more in Q3. That was Phoenix Power, a thermoelectrical plant with more than 500 megawatts, was connected on August. And we expect that they start operations in the next month, but they are going to consume us close to 82 million cubic feet per day once they are fully operational. We expect fully operation for them for next year. In the case of the industrial segment, we have in the last month 21 new industry plants were connected, and the average monthly volume consumption increasing 5% compared to the same period of 2012. In the case of the NGV, there is the natural gas for cars. We have 10 new service stations that were joined to Calidda distribution system. But more important is that right now we have 165,000 converted vehicles using natural gas in the city of Lima. This represents more than 60% of all the taxis that we have in Lima using natural gas. On the other hand, something that we are working with the Lima municipality is to accelerate the migration of all the Lima public bus transportation system to natural gas. Actually, the principal buses of the municipality of Lima are using natural gas, but we are looking for almost all the buses of the municipality that they move to natural gas in the near future. Finally, in the residential and commercial side, during the last quarter, we had 16,000 new customers on that sector. I think this is probably the best quarter that we have during the whole Calidda operation since we started. We have 2 records during that period. We can say that in October we have a new one. So we are growing and growing this sector month by month. Actually, we have close to 140,000 customers using natural gas in the residential and commercial segment. Moving to the next slide, in the commercial performance, it's important to mention that our penetration rate increased over the years, and at Q3 we have a 47% of penetration rate. Considering that the first year we have a rate of close to 28%, as we have here an average, we can see that the last month we are having performance above 50 or 60% in some cases. That generates that we increase the whole average of the whole network. Our idea is to maintain these trends and continue growing the penetration rate so we can be more efficient in our network and in our CAPEX. Moving to the next slide, we have the accumulated volume consumption by client segment. We can see in the first part that of power generators, we have a decrease of 8%. And the main reason is that the 2 main power generators moved to a combined cycle. That generates that they need less gas to operate. Here for us, it's important that we have a take-or-pay contract with them. So really they pay us no matter if they decrease their volume the same amount. So really in the case of power generator, the whole segment is under a take-or-pay contract. So the impact in the volume is not so significant as can be in other segments that we don't have a take-or-pay contracts. In the case of the industrial, we increased 5%. We have, as mentioned, 21 new industries, but at the same time, current industries are using more and more gas. And as part of the Peruvian economy growth, year by year they are increasing their production, therefore they are using more gas. In the case of NGV stations, as I mentioned, we have almost 165,000 cars using natural gas, and the increase of converted cars to natural gas are increasing significantly every year. As you can see in this graph, the volume also is increasing a lot. In the last year was at an average of 27%. We compare Q3 2013 to 2012, we can see a growth of 13%. The main reason here is that as we are almost at 65% of the whole taxi capacities or number of taxis that we have in Lima, the average of growth is going to decrease a little bit also in the next year. And due to that reason, we are looking for new segments, as I mentioned, like the public transportation that is handled by the Lima municipality, and also we are looking for different companies that have bus transportation across Lima and outside Lima. Finally, in the residential and commercial side, we can see a significant growth in the last 4 years with an average of 52% per year. And in the last quarter, we can see a 30% average growth compared to 2012. We expect that we will continue in that trend for the next in the next quarters. As I mentioned, we are doing new records in the last month, and we expect to do more records for the following months. Moving to the next slide, we have the financial performance and key metrics. Revenues are growing year by year in an average rate of 32%, and in the last quarter compared to 2012 in 12%. This is a consequence of the volume. As I mentioned, we are growing in all the volumes, and you can see here that the power generator impact is not so significant, and we are growing a lot. Also, it's important to mention, as you can see in the right side of this slide, how the revenue is distributed by segments, how we have less risk in some way because we have all our segments more close to each other. In the first year, we can see that we have more volume or more revenue coming from a particular segment, but year to year we are having a better split, minimizing the risk and having more income for all the different segments. Also, as we have a different tariff for this segment, in the case of the power generators are the lowest one and the residential are the biggest one, the unit margin. Our focus, you can see that we are growing more and more the residential commercial side, that is the one that generates more margin. But also it's important for us to increase the installation services. That also is growing a lot if we compare to the first years, 2009, for example, and that generates a significant margin for us. We can see the revenues in the bottom of the slide and the EBITDA. We can see that the EBITDA is growing also year to year. In the last quarter compared to 2012, we increased from $48 to $51 million. We expect to close the year around $67 to $68 million. In the case of the cash, of course, you can see we still have significant cash as part of our bonus, and we expect to use all this money as part of our capex program and growth program in the next month and part of next year. Moving to the next slide, we have key metrics. Here we can see the case of the EBITDA margin and the EBITDA, how much we are generating. Last year we closed at $64 million, and this year we expect to grow above 67. It's important to mention that at middle of last year we have a tariff adjustment that obviously impact us in terms of the unit margin, but as a consequence of having more and more volume and at the same time of having more and more installation services, we can compensate that decrease and even it grows in the terms of the EBITDA margin generation. The EBITDA margin is a little bit lower, obviously, with that effect, but if you compare to previous years to that adjustment, 2009 and 2010, you can see that we are above the usual margin that we have in the past. Well, in terms of the interest coverage and the net debt against EBITDA ratios, you can see obviously the impact in the case of the net debt EBITDA ratio of the bonus we just made. We expect, as we mentioned, to decrease these ratios in the next years. And in the case of the interest coverage, of course, that we have more debt, we want to decrease also these ratios. And as part of our next year's plan, that we expect to generate more EBITDA and more net income, we expect to reduce also these ratios for the future. I think this is the last slide, and we pass here to the questions that you can have.
Thank you. We will now take your questions. If you have a question, please press star and then 1 on your touchtone phone. If you wish to be removed from the question queue, please press the pound sign or the hash key. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star and then 1 on your touchtone phone. We have a question from Jeff Healy from AIG. Please go ahead.
Hello, sir. Thank you very much for hosting this call and all the information on it that you put out. I just have one thing I'm trying to tie back within your slides to your financial statement. And I was wondering if you could walk me through a reconciliation from your operating profit on September 2013. It looks like it was $37.5 million. And if you could kind of walk me to how do we get from there to EBITDA, which looked like you guys had $67 million, if I read your slides correctly, for LTM? Or I might be confused on your financial statements. I'm not sure if you have for the years ending September 2013, so I assume it's the last 12 months. I'm not sure if that's supposed to be a year-to-date number.
Yeah, just to clarify here is that in the slide that we have financial performance, last 12 months, LTM is the last 12 months.
Okay.
And so it's not necessarily the same as the 2013 that we can have or 2012. So really
okay.
it's not the same number. That's probably one of the part of the difference. And the second, just to clarify, we need to remember that we have also the pass-through that generates a difference in the numbers.
Okay, so maybe and I think I might be able to put it together here on your slide 42, where you have EBITDA of $51 million for Q3 2013. Is that a year-to-date number, and is that maybe what would tie back to what you have for your financial statements? Because I think your depreciation was somewhere around $14 million, which would kind of make the numbers fit. Is that what that 51 is? That a year-to-date 2013 number through the third quarter?
Yes. Yes, that's a year-to-date. That's originally 51.
Okay, so that's year-to-date. So if I take your financial statements where you have 37.5, the difference there is just the depreciation then.
And maybe the confusion I can make during the teleconference is that I mentioned that we expect for the year close 67, 68. That is the same number that the last 12 months. That is the next row.
Okay.
But today, at the end of October, we have 51 million of EBITDA.
Got it.
At the end
Okay.
of September, sorry.
Okay, I appreciate it. Thank you very much for the answer.
Once again, for any questions, please press star 1 on your touchtone phone. We have a question from Aaron Holzberg from Santander. Please go ahead.
Yes, good morning, and we very much do appreciate this call. I'm sorry if I missed this because I may have come late to the call, but what are your projections? What are your assumptions for how many residential customers you're likely to add in 2014? What's your target?
Thank you for the question. As part of our target for next year, we can mention, and this is also part of what we included in the proposal for the next period tariff, is to have above 100,000 new customers per year. Probably we are going to move next year to that ratio. That's our target, 100,000 customers for next year. Although we expect to pass that target, but we can be just around that number for next year.
Okay, and I'm sorry if this is a dumb question, but are these customers coming from the same areas of Lima and Callao that you're already in, or are you entering new neighborhoods?
No, we have our concession for the Lima department and Callao. They are coming from Lima City, that are the same place that we are working and are our actual customers. Just for your information, Lima City is one of the 30 biggest cities in the world with almost 8 million persons. So we have a potential market of 1.4 million households in Lima.
Yes. Okay. Thank you very much.
Thank you. At this moment, we're showing no further questions. I will turn the call back over to you for any closing remarks.
We want to thank all the participants in the teleconference, and we are posting all this information in our webpage. In case you have any further questions during the next days or weeks, you can send us an email. We have all our address, emails on that webpage. You can call us. And in case you are visiting Lima in the near future, we're more than happy to have a meeting with you and clarify any doubt or question that you may have. Many thanks.
Thank you. Ladies and gentlemen, this concludes today's conference call. We thank you for your participation. You may now disconnect.